voters decided to fork Terra Luna, so we will most likely be seeing a 2.0 version of Luna itself. The LFG Foundation decided to pay back everyone who suffered their losses from the Luna fiasco, and they say they're gonna start from the little guys first, so we have to see if they're actually gonna go through with that. USDT and USDC, they go a step further and they become even more transparent with their holdings, their cash holdings or their asset holdings to back up their tokens in the crypto world. And also, while they're doing step forwards, DEI is taking step backwards, being another stablecoin that is depegging from the dollar, currently trading at around 78-ish cents per dollar. And all of that is happening while the European Central Bank is saying that crypto are worth nothing and they want to implement strict rules about it. So these are the topics that we're going to be covering today. So without further ado, let's just start right into it. The first thing that we're going to be seeing is the DEI situation. They fell over 50%. Right now it is trading at 30% less than its peg. But this is just the beginning, in my opinion. Now, all these algorithmic stablecoins are going to be plunging down and people are going to start to lose hope on them or unstake and stop using them. I personally was using DEI for a little bit since I started to see the depeg at around 89 or 90 cents. I just sold all my DEI. So if we check out the price of DEI right now, yes, it is trading at around 79 cents. So if we see the last 7 days, we got all the way to 55 cents, maybe even lower in some cases, 55 cents. But I'm pretty sure that if you were, for example, on any other exchange or any smaller exchange, you could have got that spread a little different. You might have got that spread to all the way to 50 cents, which is what happened for some people. But right now, they seems to be going up, seems to be looking to peg back to $1, but we could never be so sure. It happened to USD. USD got all the way back to 90 cents before dropping to what is it right now? It's trading at 6 cents. So it is now 94% under the pegged price of $1 that it should have been. You can see some people are still buying and selling. There's a whole lot of volume on the 24 hours. So there's a bunch of people buying and selling, and it is just like we imagined. It has sometimes some big spikes, like right here it went to 30 cents all the way to 31 cents, but overall it is just in a big red line. So not so much we can do about it right here. So I don't know if this is going to be the same thing for DEI as it happens to USD. DEI works a little bit different than USD does with this algorithmic stablecoin. DEI is hybrid, as they call it, but I don't know if that will be enough to keep its peg to bring the peg back up. So now for second news, we have USDC and USDT. If you know USDC and USDT, they are both centralized stablecoins and they are backed by the dollar, meaning that they have dollars, physical dollars somewhere in the world. For USDC, for example, they're owned by Circle, and Circle has these holdings of US dollars. Now for Tether, this is a different story. Last year it was proved that they didn't even have the 3% of the market cap of USDT in dollars. So they had a bunch of treasury bonds, a bunch of stuff that made that very illiquid. So in a case of a bank run like we saw in USD, they wouldn't have enough money to cover for these people selling their USD. But now we've seen that they're starting to get more transparent, to become more transparent. They've lied a bunch of times about owning everything in dollars, which then was proved. You can even see a video, it's going to be linked right here, that CoffeeZilla made debunking everything that were said. But now we've seen that they're trying to be more transparent. For USDC, I think USDC is my favorite stablecoin. I always say that, and I always also say that I don't like USDT that much. So now let's take a look at what USDC and USDT are doing. The last time I checked, USDC, they had over 85% of the market cap in cash or cash associates. So they were very liquid. They did have a bunch of liquidity in hand. But let's take a look at these two articles right here. USDC will do a reserves report, which for USDT is something that they did, but they weren't audited. So they did them themselves, which is kind of useless. They could be lying about it, but right now they're going to do the right way. At least it seems like they're going to do that. So the CEO of Circle, the owners of USDC, he says that over the past week, we saw 8.6 billion USDC issued and 6.3 billion USDC redeemed, with a net weekly increase in circulation of 2.3 billion USDC. As for Tether, they are reducing its commercial paper size and focusing and trying to grow more the position on actual cash in hand. So this is a good thing. But still, if we look down here, as March 31st, so a couple of months back, Tether's 82 billion reserve were 86% cash and cash equivalents. The rest includes 4 billion in corporate bonds, 3 billion in secured loans, and 5 billion in other investments like cryptocurrencies, according to the report. The report is really boring to read. They don't have any charts, any visual data, so it really sucks for you to read. If you want to read, I'll leave the links right here. You can check it out by itself. It's basically just this. But from that 86% right here that you can see that they say that a cash and cash equivalents, just a small part of that is actually cash. So from that 86%, only 11% is actual cash. 52% of that 86% is consisted in treasury bonds and commercial paper. So treasury bonds and commercial paper, they are, yes, worth money, but they are very less liquid than actual cash, because if then there's a massive bank run that starts to, and people starts to massive sell their positions, then it means that they have to burn that cash and then try to sell as fast, maybe not for the price they're worth, both these treasury bonds and the commercial paper. The commercial paper being basically that. It's that from any other company there's going to be paying them in the long term. They're trying to lower this commercial paper and get more cash in hand, which is amazing, because still right now only 11% of that 86%, meaning they only have around $7.7 billion in cash, like cash in hand, from the 82 billion we have currently in the crypto market. So it is still a ton of money, but that means that there's less liquidity than we think they have. Of course, they can sell everything else, but depending on the time frame of this depegging, this meltdown, they wouldn't be able to cover for everyone trying to sell. Another news that we have is that the European Central Bank, they want to create their own euro digital asset. It is going to be like a cryptocurrency, but it won't be decentralized. So it is a CBDC. We even scroll down here and we can see, which is a central bank digital currency. What does a central bank digital currency means? It looks like a cryptocurrency, it smells like a cryptocurrency, it walks like a cryptocurrency, but it is not a cryptocurrency in that way that we know, like Bitcoin, because Bitcoin is completely decentralized. No government, no bank has power over it. They cannot decide, let's take away all the Bitcoin or let's print more Bitcoin. No, these CBDCs, they are basically just digital money, digital dollar, digital euro that work the same way. The Fed can turn on their printing machine, print more or print less, but now it's just in a digital asset. Instead of being paper wise, it is just going to be digital wise, digital version of the same thing. So they want to do that because then people can be using these assets instead of using cash in hand. But the bad thing is that you will suffer from all the regulations that these currencies have, these fiats has. Crypto has been created to separate from these fiat, from banking powers, from central banks powers. This is what we want. We want in crypto to stay away from central banking, from powers governing our money. And of course, with that comes a lot of risks of people not knowing where to invest, people taking risks and then losing their money, not enough regulations. But this is a work in progress. This is why crypto right now is like the wild west. We don't have any rules. This is basically just like the Oregon Trail, people going and then settling somewhere, creating a new city, a new village, a new settlement with a bunch of people working together to create something new. But of course, there's rug pulls, there's crimes being committed, there's a ton of bad stuff, but also a ton of good stuff happening because there's no government, there's no legislation in crypto. And this is what makes it so good, but also so bad at the same time. This is why we see a bunch of people criticizing crypto, saying it is a highly speculative, highly risk asset. I do agree with that word. It is highly risky, but I think crypto will solve a bunch of problems that centralized banks cannot solve anymore. So of course, we will have these USTs, we will have these days, we will have these rug pulls, like we will have these famous rug pulls. Of course we do, but eventually when these markets start to collab, we start to have some inside regulations of DeFi, inside regulations of blockchains and crypto, not from the governments, but from a DeFi police or a crypto police. We sort of create our own decentralized government. Of course, that might be dreaming a lot. That might be saying, that might be me just speculating something that might never happen. But this is what we're going for. We're going to limit the power that the government has on our money using decentralized assets. They are risky right now, but I see in the future everyone using that, everyone using NFTs for sort of documents, a sort of legit documents that could be, and contracts that could be exchanged between two parties to, for example, buy and sell properties, buy and sell vehicles, stuff like that. I see that eventually we'll get to this point, and that will be way better with decentralized finance than with centralized finance itself. So we will see what the centralized European bank will decide to do. Also, Brazil is trying to do something like that. It's trying to create a CBDC for the real, which is the fiat currency we have right here. So we'll have to see how will that look in the future. Now we go to the Terra Station news. Everyone is thrilling to hear from Terra Luna right now, and they proposed a revival plan 2. So they updated already, and this is the final version of it. So the proposal is to create a new Terra chain without the algorithmic stablecoin. So the old Luna will be called Luna Classic. The new Luna will be called just Luna. Luna to be airdropped across Luna Classic stakers, Luna Classic holders, residual UST holders, and essential app developers of Terra Classic. These wallets will be removed in the whitelist for the airdrop, making Terra a fully community-owned chain. So they will be completely decentralized. There is actually a 60%, 66% vote for yes, 20% vote for no comment. They abstained. Not even 1% voted for no. And no with veto was actually 13.41%. So right here we have all the validators that voted, their voting power. So how much of these numbers actually represent their votes. So we still don't know when, we still don't know how is that going to work, but we are going to have Terra 2.0, which is going to be just called Terra, and we will have the Terra Classic, which probably no one will use Terra Classic. It's just going to be created to bridge between old and new assets. Then another thing that we have right now is that the LFG announces to compensate those who were using UST. So if we scroll down, we have their Twitter right here saying the foundation is looking to use its remaining assets to compensate remaining users of UST, smallest holders first. We're still debating through various distribution methods. Updates will follow soon. Now they only have $82 million total in their vaults, and that means that the reserves have shrunk by 97%. 97%. And right now, what does it look like? It looks like 313 Bitcoin, 39,000 BNB, 1.9 million AVAX, and 1.8 billion UST, and 200 million Luna, 222 million Luna. So if you were one of these holders, if you were one of these stakers on Anchor, I think you would have your money back eventually. This is good news. I lost a lot of money. A bunch of people also lost a lot of money, not even in Luna itself, but on UST. UST was kind of like a safe haven. Anchor was a safe haven for crypto investors. We at least thought it was a safe haven, but it looks like it wasn't. Now from our part, we just have to wait to see if this will become true, if they're actually going to follow through with this, and if we're going to get any sort of airdrops in any other token, or maybe in the new Luna token. We still don't know how that will work. They're still seeing that they're working on it to see the methods they're going to execute this. For the last news, actually had to show up to the parliament, the Korean parliament, and he has to pay a ton of money, something like $72 million in taxes, because even though his company was part of it in Singapore and on Virgin Islands, I think it was on the Virgin Islands, the Korean parliament states that since the headquarters are still in Korea, which they were before, now he closed the Busan headquarters, but the government still wants him and the LFG organization, the Terra Luna Foundation, to pay these fees. We will also be keeping an eye on that, see if he's actually going to get some jail time or not. Of course, here we have two sides, people who want him to go to jail, people who don't think he deserves to go to jail. I personally don't have a strong opinion on it, since when you go into DeFi, you don't want to have anything to do with the government. You don't want to be centralized. You don't want to be physically or virtually attached to the government. But then something like this happens and then people ask for regulations. Well, if you want regulations, then I think you should look to the stock market or something like that. But I still think that a bunch of people lost their money, and a sort of compensation should be required for people who were stupid enough to not do their own research about it and now lost more than what they could afford. So there's cases and cases. I still don't have a strong opinion for these sort of things that happen in DeFi, just because it should be completely hands off from the government, hands off from TradeFi and governments. But what do you think about this? Should he go to jail? Should he just be blocked from ever creating something again in DeFi? What are your opinions? What should happen to Do Kwon if you had the power to do so? Leave it down in the comments. Let's have a quick chat about that. Anyways, this is going to be it for today's. I hope you enjoyed this weekly recap from last week. I'll see you guys tomorrow for another video. And if you enjoyed, take a quick time just to scroll down a tiny bit, like the video, subscribe, and turn on the notification. This helps the channel a lot, really. And if you already did so, thank you so much. And I'll catch you guys tomorrow for the next one. Peace.